Hey, it's Nathan with optionsforl.com. In this video, we're going to go over the long iron condor. We're going to do a definition or explanation of what a long iron condor is. Then we'll hop over to Robinhood. I'll show you how to set up a long iron condor. And then we'll look at Robinhood Legend and we'll do a long iron condor over there. All right, so first things first, an explanation of what a long iron condor is. Now we're looking at our handy dandy cheat sheet. You can find it at optionsforl.com. You can see options cheat sheet right down here, or a link in the description down below. And what we're talking about in this video is the long iron condor. And so what it is a debit trade. That means that you have to pay money in order to open this trade. When you want to do it is if you're expecting a big move on the stock or this underlying asset. You're expecting it to go up or down. You're not sure where it might go, but you want a big move in order to do a long iron condor. This is how to open the iron condor. So you're buying to open and selling to open, both puts and calls, and you're doing the opposite if you want to close out the position early. And we'll get into an example in just a minute, which will kind of, explain what these variables mean. But if you wanted to, you can see the key up here, what the variables mean, and you could go ahead and basically align them to what we're going to do in the example. And then I'll have a link to the video that I'm currently recording right here, so you can check it out if you want to. Additionally, I do have a short iron condor video that you could watch if you're interested in the short iron condor. There's that video as well. All right, so let's go ahead and go through a few definitions or explanation. The long iron condor is a debit trade. I already said that. That means that you have to pay money in order to open this particular trade. It is made up of 4 legs. You're going to buy a put spread and you're going to buy a call spread, and it's a bull call or a bear put. And if you're not familiar with these trades, I do recommend watching that video. I do have a video on both of those trades as well on the handy dandy cheat sheet. So if you understand a bull call spread and a bear put spread, like doing a long iron condor will be a piece of cake. Like I said already, it's best when you expect a big move. You're not sure where it's going to go, but you're expecting, something to happen. Maybe the CEO is getting fired or they're about to release earnings, and they might be a really important set of earnings, or maybe they're about to launch a new drug or something like that. Again, it is a debit trade. You pay to enter. The max loss is the debit you paid, so it is a defined risk trade. And that that the max you will lose is what you paid to get into the trade in the first place. Maximum profit is capped. It occurs if the price finishes beyond either wing, so you'll see that in our example. The main risk, the price stays near the middle, or the IV or implied volatility crush after the event. So maybe the event happens and it's not as monumental as you were thinking it was going to be. So the price kind of stays middle, or the implied volatility collapses because the uncertainty kind of went away. In which case that could hurt your position. Also, time decay. So you need the move to happen within your time range. The sooner, the better, because you have time working against you when you hold this particular position. Long iron condor break even. So you have 2 break evens. You have a lower break even, which is your short put strike minus the debit paid. And you have an upper break even, which is your short call strike plus the debit paid. And you'll see that in an example, but there's an example written right here. If you wanted to read it, you can pause the video and read it real quick, but we'll do a real life example. So I'm going to move on. Pros and cons. Pros, it's a defined risk strategy, so you can't lose more than your debit, so that's kind of nice. You know the risk going into it. You're not going to lose unlimited money or anything like that. You don't need to pick a direction. You just need to be correct in that it makes a big move either up or down. And like I've said many times, it benefits from a large move. Now the cons are, if the stock chops around, you can lose the debit. So you do need the big move. Otherwise, you're going to, lose the debit. Implied volatility drop can hurt even if price moves a little. So maybe the price moves a little bit in a direction. However, the uncertainty around the stock has subsided and the implied volatility has dropped, therefore reducing the price or the cost of the options, which isn't something you want in a debit trade. And then there are more legs. So again, this is a 4-leg trade, and you may have more fill and slippage considerations to take into account when placing this trade. All right, so let's head over to Robinhood and set up this trade. So we'll go to Robinhood, and I'm going to choose SoFi. Let's say that they have an earnings report coming out, and I think that there's going to be lots of movement around their earnings report. So here we are in SoFi, and I want to do trade SoFi options. So we'll click that button right there. All right. And I'm going to say, the earnings report is coming out January 20th or something like that. Now, I don't know if that's true or not, but we're just going to go with it. January 20th, we have an earnings report, so I'm going to select an expiration date of January 23rd because I expect the big move to happen before that expiration date. So we'll go ahead and open that one up. All right, so we'll go ahead and open the call side first. So I'm on call, and we'll do the buy first as well. And with a long iron condor, typically you don't go too far out of the money. Like on a short iron condor, you usually go, kind of far out of the money, maybe a 0.2 delta, and that's where you sell your short call or your short put. And you're hoping that your options expire worthless. However, with a long iron condor, you want your position to get in the money sooner rather than later, so that way you can capitalize on those earnings and that big move. So in this example, I'm looking at this $28 strike price. The current share price is $27.43, so it's only 57 cents out of the money. So I'm going to go ahead and add that to my order. I'm going to be buying the 28 strike price, and then we need to go ahead and sell our call option, and we're going to sell it further out of the money. So here's where we can go ahead and select our width. And I'm going to do a $2 strike width, so 28 to 30. We're going to go ahead and sell the 30. And we can see right now I have a call debit spread, or also called a bull call spread. So we have one side of our long iron condor set up. Now we need to switch over to the put side. So we'll switch to the put side, and we'll go a little bit out of the money. We'll go to the 26.50 strike price right here. And I want to switch to buy. We're buying first. So we buy closer to in the money and sell further out of the money on both the put and the call side. So I'm going to go with the 26.50. We'll go ahead and buy that particular option. And now I need to switch to the sell side. I'm going to sell my put. I'm going to go $2. So we'll go to 24.50 right here. And we'll go ahead and sell this particular strike price. And we can see right now, I have my long iron condor set up. Now Robinhood's classifying this as a custom trade, which is fine. It's still a long iron condor. And we can see what the profit and loss example kind of looks like here. My max profit is $104. My max loss is $96. My break even is $25.54. So I needed to go below $25.54 so I can start earning a profit. And you can see that I get my max profit at $24.50. So that is the short strike price on the put side. And then on the call side, my break even is $28.96. So I would need the price of the stock to go past the $28.96 so that way I can start earning and I can receive my maximum profit at my $30 strike price. And you can see that I could earn that $104. So I need a decent move, it's got to go like $1.50 before I start getting money back and making this a profitable trade. And for the sake of example, let's go ahead and play with the strike spread width. So instead of doing a $2 spread width, let's go ahead and make it a $3 one. Now, real quick, my max profit was 104, max loss 96. So let's try and remember that. So we'll get off of 24.50 and we'll go to 23.50 and we'll go ahead and sell that position. And then we'll switch to the call side, and we're going to go ahead and move this one up to $31 instead. And there we go. So now my max profit is 185, where my max loss is 115. So a more significant max profit, a little bit larger maximum loss, but also my break evens move further away as well. So I need SoFi to make an even larger move in this particular example. But I just wanted to show you how the width of the strike spread impacted your profit and loss. And when you're ready to place the order, you just come here to continue. And you can go ahead and select the number of contracts that you want to go ahead and buy, your limit price. So the price you're willing to pay for this particular position. The closer you get to the ask price, the more likely that it will fill. But right now it's set at the midpoint right there. So that's a good starting place. But if the order's not filling, you could increase it to, 116, 117, and hopefully your order would fill. Time in force is good for day, so that means at the end of the day, if your order doesn't fill, it will automatically cancel, and you'd have to set up another order, or good till cancel, so your order would remain open until it's filled, or until the expiration date has passed. And so those are your two options for placing this particular trade. All right, let's go ahead and hop over to Robinhood Legend now and set up the trade over there. Alrighty, we're looking at the options chain right here, and let's go ahead and set up the same exact trade so we can see that the numbers still match in both places. We were doing a January 23rd expiration, so we'll go ahead and pop that open. And we'll go ahead and set up the call side first, just like we did on regular Robinhood. Again, we typically want to be more at the money than out of the money with these long iron condor positions, but I mean, maybe you have a different philosophy or a different method on why you want to open a particular position. So do whatever, makes sense to you. But we're going to go ahead with that $28 strike price. We're going to go ahead and buy that position first. Remember, we're buying the position closer to the current price of the stock, which is $27.43. And we'll go ahead and sell the call option that's further away. So we'll go ahead and do the 30 strike and we'll sell that position. And there we go. There's our SoFi call debit spread. Now we'll go to the put side. So over here on the put side, and we did the 26.50. Again, we're going to buy the put option that's closer to the current price, which is 27.43. And we're going to sell the one further out of the money. And we're going to go with the 24.50 strike price. So we're going to go ahead and sell that position. And so there we go. And here in Robinhood Legend, it tells us that we are doing a long iron condor. Now, I don't know why over in regular Robinhood, it doesn't say long iron condor. It would be great if it did, so that way it confirms that, we're setting things up properly. But in Robinhood Legend, it shows us doing a long iron condor. And we can see our order information right here. So here's the 4 legs that we are opening. The quantity of contracts that we want to trade, our limit price, time in force, so same options as regular Robinhood, our max profit and our max loss and our break evens right here. Now, if you want to see the little P&L graph, you can come to simulated returns up at the top right there. And then you want to move the expiration all the way to the end, and you'll get the same type of graph that you get on regular Robinhood. And you could go ahead and play with this graph to see where you need the price of SoFi to be in order to break even, and then how to get your maximum profit out of this particular trade. So again, you just come up to simulated returns and then move the little expiration slider all the way to the right, and that'll make your graph look like it does on regular Robinhood. And of course, when you're ready to submit your order, you just come over here and click on submit. And that's pretty much it for long iron condors. Hopefully you found this video helpful. If you did, I appreciate any sorts of likes, comments, subscribes, anything like that. And I hope you have a great rest of the day.